All right, welcome back. Today is the 17th of June 2024. So we'll be looking at Euro USD, doing some analysis and showing you what the market is most likely to do next. All right, so let's just clear the charts and let's start from the very beginning. Okay, so let's go down to the monthly, see what the monthly is telling us because you need to start from the higher time frame before coming down to your actual entry time frame. All right. So Euro USD, we see this huge bearish move to the downside on the monthly, but we won't be concentrating on this past price action, right? We'll be concentrating on the most recent price action. So we will be focusing on this recent price lag right here. So we had this push to the upside and we had this fair value gap right here. We had this fair value gap right here. Price think into it, we trace back up, and price kind of price almost kind of disrespected it. But last month we saw a very huge up candle to the upside. It took out this high, this previous candle high, and then but it didn't break, right? It didn't break to the upside, neither did it break to the downside. So it closed within. It closed within. So it is respecting this high right here. Last month price respected this high right here, and now price has taken out this last month high and is still respecting it, right? Price still respecting this month high. So right now on monthly it is kind of like a 50-50 price action. It's not really clear. It's not really clear, but price is giving us higher lows and higher lows. But let's go to the month to the weekly and see what price is doing. So down on the weekly, we have we have fair value gaps going lower, right? And that's already a sign for us that price is most likely to trade downwards. So last week closed with a respect candle to the downside, and we are already seeing potential fair value gap being created right here, potential fair value gap being created right here as price is pushing up this week, is pushing this week to the upside. So if it close within, let's say below here, we'll be having a potential fair value gap for trade back into price to trade back into before going back to the downside, right? If it closes down here, then we'll be looking at price trading back into this fair value gap before continuing down, because right now we do not have anything down here which is going to try to maybe push price to the upside besides this low right here, because after price takes out this low it will try to retrace back up. So um the weekly is looking bearish, right? It's looking bearish, and let's see what the daily is doing. Let's see what the daily is doing. Remember, this right here is a respect candle, which means that there are fair value gaps up here which are most likely to push, which are most likely going to hold and push price to the downside, right? So if price is going to continue down, this will be our first target right here, and this right here will be our second target right here, right? So those are our targets right there. Those are our targets right there. So let's go down to daily, see if the daily will give us anything to work with. So, okay, daily. My God, daily is really shitty. We had this fair value gap. The daily, we had this fair value gap, but it was already traded back into and went back down really nice. Last week I think price closed down here, but it already moved up and filtered this low. Already traded back to this previous candle low right here. So there wouldn't be any fair value gap right here. I was really looking forward to seeing this fair value gap being created right here. So daily is not giving us anything. right? Daily is not giving us anything. Daily is instead showing us a sign, a bullish sign. Daily is showing us a bullish sign. So where's that bullish sign? The bullish sign is this candle. This candle which was created last week. This Friday candle is a bullish sign for us. It's a candle which tells us that price is respecting something down here. Price is respecting something down here. Price is respecting something down here. No, maybe it might be this low, a low of this respect candle. It might be it, right? Because that's the most recent swing low that price swept. Price took out before going up. So price is either respecting this low to then continue to is either respecting this low. So which actually means that on a lower time frame there are fair value gaps down here, which are going to hold price, like push price to the upside. And our first target, if price is gonna continue upward, our first target will be this high right here, right? Our first target will be this high. Our second target will be this high right here. So if we are going upward, if we're going up, this will be our targets. Let's just change the colors. The first target is our first targets, and this is our second, and so on. So let's go down to the 4 hours, see what the 4 hour is saying. The 4 hour we have 4 hours we are failing to create new fair value gaps. We are failing to create new fair value gaps. On the 4 hours, we did created this bearish fair value gap. I think it was on Friday. Yeah, on Friday we created this bearish fair value gap, and then we created this respect candle, right? Price took out this low right here. Price took out this low and then respected it, which means that on the lower time frame we have bullish fair value gaps which are most likely to push price higher right there. So if you move down to the 1 hour, we're going down time frame because we are having a short term buy. We're seeing a short term buy, right? To either this high, to either this level, or to this level, right? But we are indeed seeing a short term buy. That is why we keep moving down time frame. If not, we would have ended at the 4 hour or at the daily, would have ended at those two time frames. But right now we are looking at these short buys, and we're looking at these short buys, right? So right now we'll move to the 1 hour, to the 1 hour. So what is the 1 hour saying? The 1 hour is taking out this low right here and um respected it, and it's pushing back to the upside, leaving behind this fair value gap right here. So what happened? What happened is that this fair value gap got traded into and respected it, right? So right now at this point in time, this is where we would have taken our trade. I know the road was very long before taking trade. It's sometimes it's really difficult for you to get an entry because you need to wait. At this point in time, if we go down to the 5 minute time frame for our entry, go down to a 5 minute time for our entry. Our entry model is that we'll be using a sharp turn. It's like a balance. It's like a BPR, balance price range, right? We need to see if fair value gaps going in, right, and then fair value gaps going out. So at this point, we saw fair value gaps going in at this most recent leg. This is the leg right here. This is the leg right here. Most recent leg. This is it. So we had fair value gaps coming into this fair value gap, and this other leg we had this fair value gap going out. So we would have taken our first trade. I believe at the beginning of the video you saw the trade. We have taken our first trade right here, and our stop loss would have been down here, and then our take profit would be 1 to 2 RR, 1 to 2. Okay, Oh, nice 1 to 2 right there. That is it. I've been 1 to 2, and the trade would have played out beautifully. Would have played out beautifully. There you go. So after this, we had after this retracement, we had another fair value gap. Right, we had another fair value gap here, right here. So we would have taken it as well. Right, if we are taking this fair value gap right here, or or would have taken this one right here, we still would have been in profit. So we can either choose to take this one or wait for the next fair value gap. Like this is leg, it comes down, this is the next one, right? This is the next leg. It took out this high, and also um it took out this high right here, and then left behind this fair value gap right here. So it would have entered right here. But what I do is that sometimes, there are breakaway gaps involved in price movement. So sometimes I just normally enter at the creation of this fair value gap right here. So I'll just enter here. You see, one candle, two candle, the third candle. As the third candle closes, I'll just enter right there. And then my stop loss would be right here. Yep. And then my take profit will be like 1 to 2 RR right there. Take profit will be right there. And then I'll wait for the trade to play out, and boom, hit take profit right at the same time. So this is it. This is it, guys. This is it. So this is the analysis for Euro USD. This is how I would have taken my trade. Right now, price is moving towards this high, moving towards this high. So after we get a sweep from this high, would have come right down. We will have to retrace back down before continuing higher. So since we already had this opportunity to take our trade, what you need to do is that you need to go back to the 1 hour time frame right here, and then you wait for the next fair value gap that will be created. So we have this fair value gap right here. We have this fair value gap right here that was created. This is it. We have this fair value gap right here. What you need to do is to wait for price to retrace back into this fair value gap. You do not need a very big move before you can make money, right? You just need the you just need a very small move, but highest with most highest probability. All right. So this is it. These are the two fair value gap. We have this fair value gap. We have this fair value gap. We If we can get a retracement to this level or this one, then we are good to go. So if we go back to the 4 hour, if you can have a fair value gap in the 4 hour, then it will be good instead. So the time is 9 o'clock. So we are seeing a fair value gap, a potential fair value gap right here. We're seeing a potential fair value gap right there, right there. Okay, we're seeing a potential fair value gap right there. So price might close up here and then retrace back in here before continuing upward. But this is a breakaway gap, so we are not really counting on this. So that is why if we move down to the 1 hour, you will see that on the 1 hour we have this fair value gap right here, right? We have this fair value gap right here, and which can most likely push price higher, and price might not necessarily retrace back right down here, right, because of this fair value gap right here. Although this is a higher time frame fair value gap, but it's also a breakaway gap, so price might not reach here. Price might just think into this one and then continue. So if price thinks into this one, what you need to do is to go down to your 5 minute time frame, and then you wait for price to retrace into it with fair value gaps going lower and fair value gaps going higher, and then you can enter at the first fair value gap going higher. target your 1 to 2 risk reward, and you are good. So thank you very much guys for watching, and stay tuned. I do analysis like this every single day across different pairs, and just show you how I see the market and how I think what the market is most likely to do next. So thank you very much. See you tomorrow.